Welcome to Subramani. Please hit the bell icon. Please subscribe if you have not already subscribed. One question which kept coming up in one of the discussions that I was doing for a bunch of people is should we invest in a flexi-cap fund or a multi-cap fund, and how do we make the choice? Honestly, I don't have much exposure to multi-cap fund, and I have exposure to flexi-cap funds which were earlier equity funds which have become flexi-cap funds. Rather than, I have not chosen a flexi-cap fund for a very long time. I mean, I'm still investing. I'm doing an SIP in a flexi-cap fund, but this fund I've been doing for a long time before it became a flexi-cap fund. So choosing between flexi-cap and multi-cap in India today depends on your investment goals, your risk tolerance, your time horizon, and preference for fund management style. So first of all, flexi-cap gives you greater allocation flexibility. So flexi-cap funds have no mandatory allocation that you should put 25% here and all that, but yes, there is some restriction by SEBI. You cannot be a flexi-cap fund with 90% in equity. That is not allowed. That will not be allowed. But yeah, mid-cap, I mean the multi-cap is more regimented than flexi-cap funds. So flexi-cap funds can invest across market capitalization, whether it is large cap, mid cap, small cap. Fund managers can dynamically adjust their portfolio based on market conditions and opportunities and their own investment style and strategy. For example, I know one fund manager who thinks mid cap is overvalued, but in small cap he has a much bigger range of companies in which to invest. So from there he could even put some money in micro cap, right? So that kind of flexibility you have in a flexi-cap fund, right? Flexibility in a flexi-cap fund. So for example, they may allocate more to large cap stocks during volatile markets and less to small cap, and afterwards when they find that the large cap has gone up too much and small cap is much lower, then they may shift to small cap. So that kind of flexibility, you have to see what they are doing on a month to month basis, but you don't expect any dramatic change. You will not go from 70% or 60% in large cap to 30% in large cap. That does not happen. It may marginally change from 60 to 55. That's about all. Multi-cap funds are required by SEBI to put at least 25% each to large cap, mid cap, and small cap stocks. So the flexibility is available only in the last 25%. So 75% will always be in equities, and within that it will have to be 25, 25, 25. It gives you a, if I'm very optimistic about large cap, then I could be 50% in large cap, 25 in mid and small, but I can never go to zero in mid and small. So even if at a time when I think equity markets are overpriced and small caps are running way beyond, I have to, within small cap, I have to choose the cheaper, the lesser expensive ones than the more expensive ones. That's all. So flexi-cap funds are less risky because most flexi-cap funds would take a bias of being a large cap fund. So it of course depends on the fund manager's allocation. Is heavily invested in mid or small cap stocks, they can be riskier, but these are the funds which one day will look like an outlier, saying, oh, last 3 quarters they were in quarter number 4, now they're leading the pack with the 10% alpha. That is simply because they took risk in the previous time and all of the others were in large cap. This fund chose to be in small cap or mid cap, and that portion has now done well. So this adaptability can make it less risky even in volatile markets, but depends on the fund manager's skill. So I wouldn't put in a flexi-cap fund unless I'm very convinced that the fund manager knows how to maneuver between large cap, mid cap, small cap, etc. That skill I have to see, right? Multi-cap funds will have 50% allocation to mid and small caps, and so these funds are generally thought to be riskier. But I would look at it this way. I wouldn't bother, if I have a 10-year, 15-year view, I wouldn't bother too much about whether it is multi-cap or whether it is flexi-cap. Return potential, technically, historically, flexi-cap funds have performed better in volatile markets due to their ability to shift allocation. But the problem is, these so-called flexi-cap funds have a long history, but in that history they were pure equity and purely large cap. So they look good, but comparing a new thing like a multi-cap fund to an established flexi-cap is not right, simply because you have to start looking at the data of flexi-cap funds only after they actually were redesignated flexi-cap, and even after that they remain 70% in large cap. So it is little unfair to compare, but yes, multi-cap funds have started outperforming. Sometimes they have also outperformed flexi-caps with average returns of about 21-22%. But of course, the amount of money in mid-cap, in multi-cap stocks is less compared to flexi-cap. Flexi-cap offers diversification across market caps and sectors, but to the extent it depends on the fund manager's decision. They may lean heavily towards large cap, which is what average must be 65% already in large cap. That is what they do. For stability, potentially reducing high exposure to mid and small cap companies, you can choose a flexi-cap fund with a good fund manager. But if you're saying, oh, I already have a lot of money in large cap, I have a lot of money in flexi-cap, then you should look at multi-cap funds, because it's the structured diversification with a mandatory 25% to each market cap ensures exposure to all segments of the market. That is a huge advantage, right? Expense ratio, flexi-cap and multi-cap will have higher expense ratio if you compare it to index funds, but then they are very likely to outperform index funds over long periods of time, simply because index funds don't have that the ability to move across asset classes. So yeah, both multi-cap and flexi-cap have their advantages and their disadvantages. So if you are a person who is building a portfolio of mutual funds, there is space for both, but you need to understand that a multi-cap fund will perhaps have a higher standard deviation than a flexi-cap fund, also because flexi-cap funds are these old equity funds which had to get converted to flexi-cap. So their large cap bias continues. So over long periods of time, flexi-cap would have a lesser volatility compared to multi-cap. But depending on what you want, if you're going to put only 5% or 2% of your portfolio, putting in both of them makes sense. Thank you.